Here's a life insurance quick take. So for high net worth individuals, life insurance is a bigger piece of their overall planning, because for most high net worth individuals, they have a lot of lack of liquidity within their assets. So when you're thinking about people that are executives, a lot of their compensation is tied to stock options, restricted stock of one specific company. And if you're thinking of business owners have a lot of money invested in their business and not much else. And so life insurance becomes a piece that provides some immediate liquidity when life events happen. And we don't know where the price of the stock will be. We don't know who's going to take over in the business, if there's even business infrastructure there. That if a key person were to leave, then would there be somebody to step in those shoes like right away? Most of the time it's not. And so when we look at life insurance, I think the biggest component in there is to provide liquidity immediately in those working years. And then in the later years, I think the primary point of having life insurance is tax efficiency. Because if you saved enough, then you have more than enough. If you have cash flow in retirement, then you have some sort of liquidity that's already built in. So when I talk about tax efficiency here, I mean, there's tax efficient ways to pay for long-term care, to have other care costs covered, even income or taking a loan against your own money in life insurance products seems to be popular. But I think the one thing that gets left out is planning from a perspective of if you're charitably inclined. And if you're charitably inclined, and let me just give an example. Like, I'm trying to think this out and how to say it, but maybe it's easier just to give an example. And the example would be if you had a 401k, an IRA, and let's say there's roughly $1 million in it. And by the time you pass, if you've just taken RMDs, it's probably worth about $2 million. So then we can look in and say, all right, in this IRA, if I'm charitably inclined and the remaining benefit is $2 million that goes to my children or to my beneficiaries, if I bought a $2 million life insurance policy and used the RMD, excess of RMD to pay for those premiums, would I be able to transfer my insurance policy to charities in a tax efficient way? And can my beneficiaries receive the benefits from the life insurance? So I think this is a good thing to think about. I think it should be, if you are having high income or a lot of savings, or you have a large inheritance and you're trying to figure out how do these pieces of the puzzles fit together, please reach out to us. Thank you.